Hello, gang. How are you guys doing today? You guys have big plans for the weekend? How many of you have kiddos that are heading back to school already? Good. I've got my little guy home for another week, and this was his last week of camp. So, grocery shopping, yay. So he's gonna be hanging out with me, learning to trade next week. He thinks it's kind of like a video game. He's just getting into Minecraft and all of that. He sees candlesticks kind of the same way. He's like, they're building. Right? All right, guys. Well, it's the middle of earnings season right now, so we are getting a lot of huge gap plays. It's been kind of interesting because so many of the gaps have been really big that we haven't had a lot of, I guess, as many of like the breakaway gaps where then they have like the strong run days. So we're getting some of the smaller movements just because so many of the gaps have been so large. I'm going to pull up our switch over here to their charts. We're going to take a look at some of those gaps here today. And we're also going to take a look at what's going on here in the overall market. So I'm going to start by sharing with you guys. We're going to dig right into the overall market to begin with. I know I saw that SYMC is getting creamed. I'll pull that up here first. This was a big, huge gap. This is what I'm talking about. All of these gaps, so many of them are just really large here. I'll show you on the live charts here, actually. CTSH was another one yesterday. Getting a pretty big, see, these are the types of gaps we're getting in a lot of them, like CTSH, SYMC. So we're getting gaps that are coming into a lot of support or resistance, and the size of the gaps are really large. So we're getting more than like twice an average day's range. So when you get a gap that's about less than twice an average day's range, something like this that's a trap, it's easy to get the continuation the day of the gap and even for a couple more days afterwards. I'll widen this up a little bit here for you. I'll pull up that CTSH here in a second. I'll make this a little bigger. All right. So what we have on days like gaps like this is you really got to focus on watching those intraday moves back and forth, really counting those waves of two. CTSH was one where it didn't have like the typical two waves you usually see in the morning. A lot of times you'll get the two waves and then you'll get the correction. Sometimes it'll be a two wave like this and then another two wave, and then things can start to shift midday. This one shifted a little bit differently. It had the 2T here. But with these big gap plays, the fun thing about them is that there gets to be a lot of activity. So it's really easy to get fills, and setups tend to follow through very well. So when you get a setup that's formed like this 2T, you tend to get really nice follow through on it. Let's pull up that SYMC we'll just take a look at a couple of these gaps here quick, and then we'll go on over to the overall market. I know Tesla was another one yesterday. We were talking about in League of Traders, and it was another one that had a pretty big gap and then kind of fell into a range. Ended up breaking a little bit later on. We'll look at that too. So this is a little bit more typical of what you get is you'll get a two-wave move. So when you see something like a Phoenix, especially with a massive gap, you can usually get a pretty decent little day trade out of that. This one's a little bit slower, but we still have some typical patterns like your momentum reversal midday. That's another common pattern you'll see on these gappers. It'll look a little bit cleaner once I widen this up. Look at how picture perfect that momentum reversal was. You got your nice 3 lows, and then it goes right into a Phoenix. So these are the types of things you want to look for on these gap plays. For those of you that are new, I'll pull up that momentum reversal so you guys can see what that looks like. I'll show you guys that pattern here. Let me see. Got to find the right chart, right slide. All right, here we go. So it is this one. So this is just kind of flipped over, but basically what you're looking for is you're looking for this parallelogram formation, and then you're looking for these 3 waves with even spacing between each of these highs. A lot of times going into that, you'll have a strong move and you'll have a little bit of a kneecap. So we call this the leg, and then we call this the foot or the boot. So the next pattern that usually comes after that, just depending upon how this momentum plays out, is you can get a momentum reversal plus, which goes into the 2T, or you can get an avalanche, which will be a base, and then the breakdown. So that SYMC here this morning, clear this, and we'll flip back over to our chart. I'll put the chart down at the bottom. Oops, this is a different one. Let me pull up the right one here. So basically you've got the inverse here. So here's your leg. Here's your foot, your even spacing between the lows. And then this level right here is the equivalent of this zone. And then this level right here is your targets, basically your channel. And then the next pattern is your Phoenix or your avalanche. So we are still getting some pretty good technical moves here on a lot of these. I'll show you guys Tesla. So Tesla was one yesterday. Another really big gap. Actually, I already got Tesla pulled up on another chart here. So here's what you're looking at again, the really large gap. This one though, notice that unlike CTSH, the gap itself is only about halfway, so it still had more room before it could come up to the upper end of this. So this gave us a lot more potential intraday yesterday for some good continuation moves. It didn't really get started right away, kind of fell into this nice little 2-wave correction here and ended up triggering right around noon. And then you'll notice the momentum shifting again here. So this is that kind of momentum reversal type of pattern where you got that parallelogram forming and then the breakdown. So this is something you would expect, a little bit more corrective activity to happen here intraday. So a lot of these gaps, what I will do is I'll scan the earnings. I'll look at earnings that are from the day before, because a lot of times things will have like earnings where the day of the gap, it'll be such a big gap. It'll gap down. It might fall in the morning and then go into a range for a couple days. So sometimes I'll keep a list that'll have earnings like for the week. And then those bigger gaps, they'll offer continuations a couple of days later. So I just throw them up on a watch list that I can just kind of flip through. And also I'll look for earnings that are after the close, going into the new day. So like Thursday, the earnings from after the close yesterday, and then look at pre-market earnings for going into the day. And I'm looking for things that have a lot of volume to them, where on like a 100 tick chart or 50 tick chart, you have really smooth moves like you do on Tesla. Tesla, you can even see on like a tick chart, you can get some really smooth moves on the tick chart too. So here's the 200 tick chart. And that's what you want to see. I mean, originally on Tesla, the very first movement we were looking at was there was a two-wave correction right into the open that offered an initial turnaround, but this was on a really small tick chart. And then here's the bigger one that we saw on the time frame chart, the 2-minute chart. How does it work on an index like IWM or SPY? Well, when you're looking at the gap plays, what we're really looking for is something that is a major catalyst type of move. So when you have something like, let's actually switch over to the indices now. When we have something like, let me pull up our NQ here. Like a catalyst move, like on last Friday, you'll get a lot of that same type of stuff, but you don't really get the gaps. Sometimes you'll get gaps overnight with, Sunday session going into Sunday, but you don't have like the big gaps that you do in individual stocks. So mostly on things like this, what we're looking for is we're looking for strategies to reverse it intraday. We're looking for signs of exhaustion. So like the NASDAQ. This was coming up into the upper channel level from this entire uptrend that's been in place since April. And so then what we do is we drop down, we look for when we've had impulse moves that are similar distance compared to previous ones. And that's usually when momentum is going to start to shift. And so then we look intraday for reversal strategies like the momentum reversal, just kind of what you had going on over here, and 2Ts, which will be pattern like, let me throw up the 2T for you. Some of you guys are in Chicago too, so you gotta see that pattern here. So you'll have like the 2T, and these are the patterns that we're looking for on the indices more often, as opposed to gap patterns. So let's look at here a little bit more detail what's happening here in the indices right now. So we saw going into the week a continuation of the sell-off right down into this lower trend channel support. It was also the 61.8% Fibonacci retracement level. So really good support level. So at this point, I began to watch for two things. First of all, how does it react off of this support level? Because when we're looking at some of the other indices like the S&P 500, we don't have the slightly higher highs to create traps on the daily charts. So there's still a bit of room for those to play out to the upside, even though overall we're at really strong resistance levels on weekly charts. So if the momentum is strong enough, that can lead to patterns like a larger 2T, where we can get the slightly higher high. You can get the momentum reversals with the 3 highs, as long as it reacts strong enough off of the high, off of the support. But with a weaker reaction, that would have brought in another wave of selling. And we're still kind of midway on this. I'm still not convinced that this still can't try to turn around, but because it retraced so much, you're more likely that any sort of reversal or correction at this point going into next week will tend to be a bit slower. So you don't have like the really rapid 1, 2, 3 pattern that would start to form. Let me show you guys an example. An example of that is over here. So when this came into support here, you'll notice it only paused for a couple of days and then broke through it really fast. So that was one of the potential outcomes that we had when this first hit this support a couple of days ago. So since it's reacting off of the support so strongly, kind of rolled over more intraday, it makes this level of support now stronger. So any attempt to like retest that, you're more likely to get reactions off of it and not as strong of a decent break through that support level. So we go and look intraday on this. Actually, I put this on the weekly here first so you guys can see what that bigger weekly looks like. So here's the bigger weekly. Kind of widen this up here for you. So you can see that the momentum is starting to shift here, and I'll remove these off of that, but you can see that the momentum is starting to shift here at the highs. We're starting to get these bigger swings. We had the two major moves into this higher high here. This was that 2T we were looking at a couple months back. And now it's starting to widen up. So it does have that room to do things like head and shoulders or momentum reversal plus, momentum reversal, all of those things to continue to slow this momentum at this level. We go and look at this intraday, pull up the 120. It's been a bit of a trickier intraday market for people because we don't have like the slower momentum shifts that are leading to like the patterns like we saw yesterday where this ended up being a phoenix, but unlike the avalanche over here where you had that slower move, so it was really a consistently slow move, led to a picture perfect setup a couple of about a week or so ago going into last Friday. Unlike that, we don't have this slower last little move here. So the first one was pretty fast, turned over here. Second one was pretty fast. It made it give you a much more difficult setup here on this Phoenix. So even though it's triggered with the Phoenix, your stop really would have had to be under this low and your risk would have been a lot greater getting into something like this that you would just get trapped, go into a range again, pull back, not follow through as well as it did here. So these tend to be harder setups to actually get in and profit on when you're waiting for the larger setup. You really have to get in on something that's intraday and get lucky with holding the rest of it. We are at some decent resistance here on the 120, so we should expect more reaction off of this level here. You can see here's a pretty typical measured move for impulse move type of action at this zone. This is what stalled us here going into the day, and it's what's made for a choppier session here today as well. The big thing that we pay attention to are these impulse moves because they tell us when we are likely to go into a much more choppier market environment and more likely to get the corrective moves. So when you see impulse moves like that, you expect corrective moves that can change the channel. It can either go into longer bases, it can shift the momentum like that, but things get choppier. So you have less predictability than you do with the smoother breaks because there's more potential outcomes, meaning you have to drop down to much smaller intraday timeframes to watch for what those smaller patterns can be. On the S&P 500 now, we're also dealing with resistance, but like I said earlier, it has a daily chart where there's still more wiggle room that we can see happening on it. Give this a second here to load. I'll pull it up over here. So here is our ES, and you'll notice that here's the previous high. So we're just getting wiggle room going into this previous high. It's a really, really strong resistance level. And right now we've got two-wave up, zone of congestion. I talked about this in League of Traders. Maybe I talked about it last Friday as well. But you're basically treating this like this correction over here. And so it only has one move coming up out of here. So this has room to kind of play around a little bit more in here. Even if it pulls back into the lower end of this channel, it can still give one more attempt to move higher again before we get a bigger correction going into fall. So even with the resistance and a lot of things starting to show strong resistance on the weekly time frames and the monthly time frames, you still want to be a little bit more cautious on the downside. Basically looking to enter on smaller intraday setups, and then when you get the follow through, holding part of the position. A lot of times what I'll do is I'll look for a setup like on a 30-minute or a 60-minute. I'll take it with the share size I would for a day trade or a shorter term trade. And then, so it works out well, then I'll hold part of the position with a wider stop to get that larger swing trade or position trade. So it ends up being kind of like two trades in one, because I'm trading part of it as the day trade and then the rest of it as a swing trade. But I'll keep the tighter stop for the day trade and then a wider stop on the swing. And stay here, you can see again the same level of exhaustion. A little bit of a 2B coming off of that low. That's brought us up into this level of resistance in here. It's really similar again to like these type of levels here. Because this paused and then broke to a new high so quickly, this is a level that you can get patterns like versions of 2Ts where it might struggle. So if it comes up to this upper end of the channel here, that's a do or die point. So if that breaks, that can actually lead to another really strong move on the upside. More often, what will happen is it will strike that upper zone and then it will turn around and give a bigger correction. The continuation type of move tends to happen when this is midway in a previous downtrend. So you'll see it most often when you have a downtrend move, you have a sharp move up, kind of tries to go a little bit here, and then that'll break and you'll get the continuation. Whereas when this is a stronger upper level of resistance, it's more likely to go and do that 2T and turn around. I'm going to pull up the Russell and we're going to look at some gold and oil here as well. Tesla is remaining strong here as we go into the weekend. I expect it to continue to hold up. It has a really good weekly time frame for more upside. I'm just switching charts. I've got a couple screens up, so hold on a second. I'll get that Russell here. So Russell 30-minute, this is an example of what I was talking about earlier, where you can get the break and then it will pause, you get a slightly higher high, and then you get your turnaround. So this is an example of a 2T, which is this strategy right here. This is our Russell 2000 we're looking at on the 30-minute time frame. You can see those index moves are really important. You get that similar impulse move. So right at that level, that's what's helped lead this down. Now this has a little bit more room it can actually go on the downside. So this can even come back into this support level in here before the end of the day today. Weekly time frame is at really good measured move levels. Here is your first impulse move, correction, second impulse move, and this is right around the 100% expansion on this. So we should expect that this is going to correct out for quite a while. Again, it can do it just with the widening range. So you've got to drop down to the smaller setups to determine, are you going to get, back and forth moves, or are you going to get something that's going to give you a stronger reversal move? So if this continues like this and you get a two-wave move like that, it can go and do a two-wave move like this and then break down with really strong momentum on the downside. That will be one of the possibilities. Another one is if it goes and tries to do a slightly higher high, that can create a 2T, which can also be stronger. And then the third possibility is it goes and it bases out longer. And then you've got to watch for those smaller micro shifts to see if you get slower sideways moves that are going to be favoring upside or downside. So that'll take a little bit of time to play out there. It's going to make it a good environment for the shorter term trades, back and forth action. Count waves of two back and forth. So you don't want to focus too much on the waves of three. For those of you that follow Elliott wave, we're going to be looking at 2 waves back and forth here. On oil, we've got that nice 2-wave correction with the breakdown here. So we're coming into the lower channel on oil. This is going to be support. What's interesting on oil is that we have one initial big swing up on the weekly time frame. So it has these 3 swings in it. And then we've got this larger correction. So it looks like this. It goes up and then you kind of get this shift. So that has room that it can break either way. So what's interesting right now is that we've had some really strong swings up and really strong swings down. Usually if you get a really strong swing up and you're midway, you would get a pause here, and then that can offer that continuation on the upside. So the fact that this swung all the way back down really fast, that is going to make that much more difficult to happen. So the predictability level on this has decreased because the momentum doesn't have strong favor one way or the other right now, because it's strong either way. So again, you got to watch for the smaller moves, smaller setups. So we had, of course, our little 2-wave move with the breakdown here this week. Coming into the lower end of this channel, this is something that you could look for bounces off of it again. I'm leaning a little bit more on the bearish side on this than the bullish side right now. I'll show you guys the weekly. And that's just because it did swing back off of that high so quickly. So here's what you're looking at. Basically, you were looking at the potential that this could have done a tilted phoenix. And that potential has not been totally negated yet, but the strong move off of the lower end or at the upper end of that does make it a little bit harder. So a lot of times when it goes and still does that tilted phoenix is this move here. Tilted phoenix is when this move basically ends up being tilted to the upside instead of the downside. It'll still usually have the 2 waves of correction, can have the third. So what we're seeing is a lot of times it can still do that phoenix, but it'll break through the lower end of the channel first. So it'll have like those two wave moves, and then it will come back up and then break through. So it's not totally negated the tilted phoenix. All right, so let's see here. I'm going to pull up gold now. Switch this chart out here. STMP was one of our gappers yesterday with the breakout to the upside. Let's switch this over to gold now, though. I'm going to update our contracts here. We've rolled over. All right, well, that's loading. I'll pull up some of our Forex pairs. So for those of you that have been following our pound dollar since Tuesday, it is right at that major support target level. So what we're looking at on the daily chart is that back and forth move has come down here. We've seen the shift in momentum. We've got the three lows. We had that short setup that triggered here. But what we're looking at right now is that this can widen up more at this level, so we can get a lot more of those back and forth moves. So I wouldn't look for a lot more on this. You can see here intraday. Let me clear the drawings. So our initial trigger is coming out of here, the channel break. It went for the longer than the longer two wave continuation here into yesterday. So we hit the measured move support yesterday and just a little bit of extension here. So we should see this continue to get choppier here at this level right now. So the main swing is in. I wouldn't really hold anything on this over the weekend. I'd expect some reaction off of this level over the weekend, just more back and forth. We could still get some slightly lower lows, especially to create a trap under that previous low, but it's going to be a lot more back and forth whippiness. And with the way things are lately, I don't like to hold Forex over the weekend right now. Too many chances of crazy news coming out. We do have some Forex pairs here. We've got some pretty interesting patterns forming on, like, let's see, we'll pull up USD CAD. I've got that gold loaded in the background too, so we'll come back to that here in a minute. So the loonie, what we're looking at is we've got that 2T from a couple weeks ago, actually a couple months ago. So here's that 2T pattern, the measured move there. Nice move right into the first support level, two wave correction, then the avalanche, and then this is right at support in here again. So we should expect some reaction off of this support level as we head into next week as well. The larger time frames still have room to head lower. Let me show you guys that. We've got the weekly here. So this weekly still has more room on the downside. So we're just looking at some kind of shorter term reactions, and we'll have to see how the momentum plays out on that, because it is trying to get some increase in momentum on the upside and change that channel to the downside. So it could actually bounce pretty strongly here and go into more of a range. But with this pivoting so sharply, there is still the possibility it just tries to pick up momentum on the downside. So when you're playing the reversal strategies off of support like this, these are levels where you then have to watch to see how that momentum plays out. So you get the two-wave correction, you'll get an intraday buy set up at times, and then you want to see that momentum for that buy. So you want to see strong momentum basically coming up into this level, then it can do correction and then offer the continuation. If, however, you're noticing that the momentum is slower, and especially if it's hugging like channel support, then you want to get more aggressive with your trade management. So if you see two waves of upside and it's still not letting go of that support, you want to take off part of your position and tighten up your stop to trailing stop. So if that channel breaks, that actually is going to trigger the additional continuation on the downside. So there's a greater risk that that can then go into like a larger avalanche and break like that. So this is one that has that particular potential in it just because of what's happening on the larger weekly time frames. If this overall move here had been stronger on the upside than the downside, then that chance, that potential wouldn't be as strong because you'd be more likely to see this going into a longer base and then another continuation move on the upside. So then this would more often lead to like an inverse head and shoulders there. So trend placement here is really important along with the momentum. So basically, if this had been stronger on the upside than the downside, then the odds of this doing like an inverse head and shoulders and continuing would be even stronger, and you wouldn't have as much of a risk of it going slower and breaking down. I'll show you guys an example so you can see how that gets managed by showing you guys trade from yesterday on Trip that ended up being a scratch because of that very action. So TRIP over here, this is a 100 tick chart. I'll show you guys. Kind of widen this up here. And this is what I mean by managing these. You'll have a move, it goes up. In this case, the momentum was stronger. So when this did the two-way correction here and kind of shifted this momentum, it triggered a phoenix here. But what you'll notice is that it struggled almost right away. And instead of holding up here, basing out and offering the continuation, it shifted this momentum. So that meant that instead of being likely to give us that move all the way back up here, which would have been the measured move target level on this, the shift in momentum meant that we had to get more aggressive. This actually turned the trade around, triggered an avalanche instead, and it meant that the entire trade ended up being a scratch. So it's still worth trying the trades like the Phoenix when you get that pattern happening. It's just in certain circumstances, you have to be aware of when that risk is higher that something like this could happen. So the risk was higher on Trip that that could happen because on the daily time frame, we had the gap on the downside, where it had a really strong move to the downside with the breakaway gap. So it meant that there would have the possibility of more weakness coming in. Now you'll still get patterns that will try to do a two-wave that'll come up to fill the gap and then turn around. So it's still worth the shot. It's just that risk is higher. And that's what you're running into on the Loonie right now, is that you have that higher risk that this is what could happen coming off of the support here. So I'm watching this for like a momentum reversal plus type of pattern off of this support. So there's the first wave down over here, two-wave correction, two waves down, momentum is shifting. This is what can turn things around, give us a buy. But if the momentum doesn't pick up really quickly, or you see it pick up quickly and then pull back, then that management comes into play like we saw on Trip. So a lot of times things like this, when they don't work out, it ends up being more of a scratch type of situation because I'm usually entering them where I will take gains off pretty quickly on part of the position And what that does is that when the risk is higher that it might not get going, it means that when I've got a loss, it's more likely to be a scratch. And when it ends up a winner, I might not have as much as I would have if I hadn't taken off part of the position at the initial resistance, but I still end up with a good trade. So it manages me both ways by doing that. Let's look at a couple. I'm going to switch over to gold here while we let the Kiwi pull up. Whoops, what did I do? Bumped something. So we got NZD CAD actually. NZD CAD. And I'm going to show you guys gold here. So gold, what we've been following on gold is that we had the two major moves on the downside. And a couple of weeks ago, we still had a two-wave move, just like we saw on the pound dollar. So it offered the continuation intraday on the downside, just like we saw on the pound dollar. I'm going to show you guys. Here was our short. It had a little two-wave up, two correction, two-wave up again. Here's the short trigger, pulled down, ended up doing another base, just like we saw on the pound dollar. And now it is at very major support again. So on the weekly time frame, the daily time frame, this is a support level that is very similar to what we see happening on the pound dollar. And on the Kiwi Canadian, we also have similar support. I'm going to come back to that. I'm going to show you guys the pound dollar here. GBP, USD. So here's the intraday on that, the 120. And then when we compare that to gold, here's that comparative move. There and there. So we are at this level of support is the same zone of support that we have here. And both of the larger time frames on each of these are at really major support levels. So we should again stay with counting waves of 2, back and forth moves, expect things to kind of widen up, flush back and forth each way at these levels. The Kiwi, let me go back to that one. Canadian is another one where we've got that exhaustion happening here intraday. And then on the daily chart, what caught my eye is it came to this level, offered the breakdown. We're getting a continuation move. This is kind of a midway move. So I'm going to be watching this kind of both ways in the weeks ahead, where this can go to like 2B, which is your 2T inverse, because it goes to a slightly higher low, and then now we're going to a slightly lower low. So this can actually offer some pretty good reversal patterns here in the next couple of weeks off of support. Do you guys have anything that you want me to take a look at? We've got about 15 minutes here yet. So if you have anything you want me to take a look at, we've definitely got time for that. On the euro dollar, we are still looking at this as being a really messy potential head and shoulders. So the shoulder over here had that really nice, this is that avalanche where we have the shallow avalanche. You get a two-wave correction, you'll usually get a two-wave bounce. In this case, it went into a head and shoulders right here. And then this gave us that really strong breakdown. Now what happened was when it came into the support, it actually pushed through that support level a bit more. So if this had held up a little bit better, it would have had a much stronger head and shoulders pattern forming. So it got a little bit more extended on the downside, and that means it has potential to struggle more with sell-off. So when you do get like a continuation pattern, it might struggle with actually following through and can go into more of a range like that. So that's the risk that you have when you get a head and shoulders where the right shoulder is lower than the left. IWM, hey, a lot of you guys are asking about IWM. Let's pull that up here. So our Russell 2000, what we were looking at on this one is that on the weekly time frame, it had that measured move on the weekly chart. So if you recall, it had a move down over here, and we're right at that level. So when we're looking at all of how that played out, basically this can go into a longer range like this, in which case you've got to watch for which of the end of that range is it starting to favor. If it pulls into like the 76.4% fan, it can do a little bit of a better bounce. There's the risk that this can go to a 2T. It's not a strong risk because a 2T it would have gone usually a little bit more gradual here and then gone up and turned around. So it could do that, but I'm not really leaning towards that as much. Kind of more expecting it to try to do a range longer or pull back, kind of shift momentum here, and then it can break down stronger. IBM, I haven't traded IBM in a long time. Yeah, I mean, we've got some pretty, so the question is IBM bottoming? We've got some pretty good support here. What you'll notice is that this didn't go all the way back up to this previous high though. So overall, our channel is holding in this lower zone. So you've got this shift in momentum. So your risk that you run into at this point is that it might not do like a strong W and come all the way back up here. It could go into a slower move coming off of the support and then break down again for a second wave down compared to over here. And that's because this is midway in this move up, and it's also midway here going back into that level. So the biggest risk you would have on this one is that it goes and basically does this coming off of this level. So you definitely have support here, but again, this is one of those that you've got to manage like I talked about with Trip, where if it doesn't get going, it can go like that and turn around on you. So you have to really watch that intraday momentum shift for that potential. So biggest risk is, again, you've got potential that it could do more of a sideways move, kind of not really get going, and you could have a trade that would end up being more of a scratch than giving you good gains. The support on the daily is that you've got this nice two-wave move. You've got a version of a 2B here. This one a little bit higher than you usually get for a 2B, but it comes down to the slightly higher low, then goes to the slightly lower low. So you've got your version of your 2B, and then it's trying to form a messy little avalanche kind of inverse, not avalanche, Phoenix rather, Phoenix inverse head and shoulders here. So yeah, a little bit more caution on that one. OGRMF. What is that? Sometimes you guys pull up names I've never heard of. Oh, well, this is one of those fun, crazy stocks. Okay, so the nice thing about this type of situation is they do move very technically, but what you're going to run into here is that now you've already got the two major swings on the upside. So it's going to be really hard for this to continue this trend without at least correcting this long. And then that would be the third move, and it could go for like, a 2T, that type of situation on that third move. So right now, again, back and forth, two waves. You've got one wave down. It can do a second wave down very easily. So right in here, kind of expecting this to go more sideways on this. Can pull into that channel. Look for this time development, that measured time development. And if you got stuck long on this and you're trying to get out as it comes into that support zone, you want to look for bounces off of that. And that's the only thing that could really get you easily to higher highs here, where it would be a really easy move to do that. On the daily, let's see here. So daily, we've got our two moves down, two moves up. So this is really strong second wave, which means this could go out sideways, could do another two wave, and then come back into that support like that. This is that midway right here. So you're looking at this impulse move being compared to a lot of these other little ones, and that's why you've got this resistance here that is putting a damper on the bulls right now. All right, guys, anything else you want me to take a look at here quick? Nobody asked about Netflix. I am shocked. Netflix actually has good support here. This could easily swing back up. We need like one more little low that would help that out. So with the two-wave move here, kind of shifting the momentum now, little tiny low like that, you could get some of those bouncer plays coming in here next week or so on this Netflix. Baidu. So Baidu we should see come into this lower end of this channel again here. So it should hold this zone pretty well. It's not, even though we've got the three highs, you'll notice that if you try to connect those, it actually widens up. So what that means is that this might not want to be counted as the first high. You count this as one, this is two. So that can go and do a third high here, but very easily can pull into this channel first. As it pulls into the channel though, I wouldn't expect it to break it too easily. I would expect reactions off of it, whether it goes to like that higher high or it goes to a head and shoulders. Higher high is what I would lean more towards, and then more of a correction off of that. P10. P10 monthly looks lower. daily looks to be widening up again. So this could go and do like a little blurb up, then pull back down. Got your two waves down here. So it has a lot of support in this zone. I just think it's going to struggle to really get going to sustain it right away off of it. So there's more risk on this that you could get a retest because of what's happening on the larger weekly and monthly. Again, this is one. See, you'll notice it pulls up, pulls about halfway, pulls up here, then pulls down. So you actually have that same shift in momentum we were just talking about, which makes risk higher for bulls that it can try to pull back lower again. What would I think on housing? Well, we'll pull up the home builders here first. This is another one. It has only one major swing up here after it breaks this channel. And it's doing that tilted phoenix type of move, but it's kind of struggling getting going. But this is, again, when it's this midway zone, it is more speculative as to which way that's going to end up breaking because it can pull back down into this range and then go again still. And that's because it's midway up. So this just goes back to what we talked about earlier. When you get that first initial bounce and the shift, you can get the breaks lower still and still go up. So just like on oil, it's the same type of situation here. So right now there's a little bit more of a bearish bias on kind of the shorter time frames. So this weekly here is forming a little bit of an avalanche, but it might not get going too far. It could find support pretty quickly and try to turn back around. Let's look at a couple of others. Again, this is just home builders. ITB. Okay, so ITB actually, this one shows the second wave that we didn't see on XHB. So here's that tilted phoenix I was talking about earlier, a much better example of it. And we're right at that previous high. So even if this tries to retest these highs, that's acting like a really major resistance zone here. So it looks like home builders are going to struggle over the next couple of years. Is there any other like particular section of housing you want me to look at? Or does that cover it for you? You've also got things like your REITs. Here's the Vanguard. Let's see. That is pretty topsy. On the monthly, you can see here's that little avalanche. It's kind of pulling back up in here. So this is expecting to kind of widen up but continue to hold this zone of resistance. There's the weekly on it. So it's right back up into some major weekly resistance. So we should see this kind of congestion play out for the rest of the year. CTRL. All right. You're welcome. So CTRL is another one where we're right at really good resistance in here on the weekly. It's had that little bit of head and shoulders there right into this resistance. So it can push this resistance more. It's just going to slow the momentum as we come into this zone. I'll pull this up on the daily. So with this type of gap, this is again that much stronger than average gap. It's a lot like what we saw at Tesla, where it pulled up part way. It still had room to go. So this is something a lot of times you'll get like a little bit of congestion and it will still keep pushing up. It'll just shift the momentum in the weeks ahead. So it's a good one to watch for like longer intraday basis on like the 30, 120-minute chart. Look for continuation moves on the upside as it just kind of pushes up into that upper level a little bit better. I'll show you that Tesla again here. So here's the Tesla, similar type of thing, where it pulled up about halfway, so it still had room to go. So this can still push up into this level. We can easily still see some higher highs on this. It's just, I would expect the momentum to shift so it doesn't do it as quickly. All right, guys, we'll have a wonderful weekend. Enjoy some of you guys. It's your last weekend of summer before kids are heading back to school. We're actually going to head over to Phoenix for our end of summer pool party with a zillion little kids. Doesn't that sound like fun? They're all between the ages of 2 and 6. It's going to be mayhem. I know, summer did go really fast. I am just happy to be moved and getting settled, even though they still have not returned the rest of our stuff that the movers have apparently stolen. So I am still dealing with that. Yeah, not so much fun. I will be happy to get out of this 100 and some degree heat, though. Temperatures here in Tucson have been consistently above 100 ever since we moved here. One more month. No, don't say that. Say like one more week. That's better. All right, guys. Well, have a great weekend, and I will see you all back here next week. I'm going to get this saved and posted onto the website for you to review. League of Traders members, yesterday's session is up in the member section, so you can go over there, log on in and check that out. And take care, everyone. Try to stay cool. You're welcome. Bye now.